Ready for a major shift in the UAE's tax landscape? Discover how the new corporate tax law could impact your business profits. Corporate tax is a direct tax levied on the taxable income of companies and other businesses, forming a significant part of the UAE's fiscal policy. The UAE corporate tax, also known as corporate income tax or business profits tax, is a game changer for businesses operating in the Emirates. This tax applies to both UAE-based and foreign-managed businesses, as well as certain individuals exceeding specific revenue thresholds. UAE juridical persons, including private or public joint stock companies and limited liability companies, are subject to this tax. Foreign juridical persons managed and controlled from within the UAE, even if registered elsewhere, must also comply. Branches of companies in the UAE are treated as part of the same taxable entity, ensuring comprehensive tax coverage. Individuals engaged in business activities with an annual turnover exceeding 1 million Emirati dirhams are also taxable. Non-resident persons with UAE-sourced income are not exempt from this corporate tax. The tax period typically aligns with the Gregorian calendar year but can be adjusted to match the business's financial year. Taxable persons must calculate their tax liability, file an annual tax return, and pay the applicable tax within 9 months from the end of the tax period. The starting point for calculating UAE corporate tax is a business's accounting income, adjusted to reach the taxable income figure. Corporate tax rates are 0% on taxable income up to 375,000 Emirati dirhams and 9% on income exceeding that threshold. For example, a company with an accounting profit of 500,000 Emirati dirhams and allowable deductions of 100,000 Emirati dirhams will have a taxable income of 400,000 Emirati dirhams. Key concepts in UAE corporate tax include tax groups, exempt person/income, small business relief, transfer pricing, withholding tax, and double taxation agreements. Tax groups allow multiple taxable persons to be consolidated into a single entity for tax purposes, simplifying compliance and potentially saving on taxes. Certain government entities and specific organizations may be exempt from corporate tax, along with income from qualifying participating interests. Eligible UAE-based businesses with revenue below a specific threshold can opt for small business relief, simplifying their tax obligations. Transactions between related parties must occur at arm's length, reflecting market rates to comply with transfer pricing regulations. All taxable persons must register with the Federal Tax Authority, FTA, obtain a tax registration number, TRN, and file annual tax returns. Stay informed and compliant to navigate the UAE corporate tax landscape effectively, ensuring your business thrives amidst these changes. A groundbreaking shift is coming to the UAE's tax landscape, and it could change everything for multinational companies. Starting January 2025, the UAE will impose a 15% domestic minimum top-up tax on multinational enterprises. This move aligns the UAE with the OECD's initiative to prevent profit shifting to low-tax jurisdictions. Only multinational enterprises with global revenues exceeding €750 million will be affected. If an MNE's effective tax rate in the UAE is below 15%, a top-up tax will be applied to meet the global minimum rate. Small and medium-sized enterprises are exempt, ensuring the UAE remains a competitive environment for smaller businesses. Industries like technology, financial services, and global retail chains will need to assess their compliance with the new regulations. Affected companies must provide transparent financial disclosures to prove adherence to the tax regulations. The UAE joins over 140 countries in implementing these reforms to create a level playing field and reduce tax competition. This reform solidifies the UAE's role as a compliant global business hub while continuing to attract investments. Imagine a world where your cryptocurrency transactions are free from the burden of taxes. This is now a reality in the UAE. The UAE has announced a groundbreaking policy: all cryptocurrency transactions are exempt from VAT, effective November 15, 2024. This exemption is not just for future transactions but applies retroactively to all transactions since January 1, 2018. The VAT exemption covers the exchange, transfer, and conversion of digital assets, including all cryptocurrencies. For businesses, this means lower operational costs and simplified compliance, making the UAE a more attractive destination for crypto startups and global firms. Individual investors will benefit too, as they will no longer be subject to the 5% VAT on crypto transactions, making it more cost-effective to buy, sell, and exchange cryptocurrencies. This move aligns with the UAE's broader economic goals to become a regional hub for digital finance and blockchain technologies. The UAE's progressive stance contrasts with more cautious regulatory environments globally, positioning the country as a leading hub for cryptocurrency innovation. The long-term implications include enhanced competitiveness, increased investment, and a more innovative crypto ecosystem in the UAE. By removing tax burdens and establishing clear regulations, the UAE is fostering long-term growth and solidifying its status as a fintech and blockchain leader.